$25 billion. That's not a prediction. That's not a promise. That's money that's already moved onto blockchain-based financial systems. Right now, in 2026, some of the world's largest financial institutions are bringing real-world assets onto the blockchain. BlackRock.
We believe the next step going forward will be the tokenization of financial assets.
JPMorgan.
And then we can use it, buy and sell real estate, and move data. That may have value.
The idea of tokenizing.
Tokenizing things that you do something.
These are not crypto influencers, not anonymous founders, not speculative projects. These are institutions that manage and move trillions of dollars, and they are spending real money, building real products, and putting real assets on chain. And according to some industry forecasts, this market could grow from tens of billions today to as much as $15 trillion by 2030.
Financial institutions will drive the RWA market $1 trillion by 2030.
Everything on the blockchain. This will create a $16 trillion market of RWAs.
RWAs, or real-world assets, could be the next big narrative in crypto. Specific could become a $1 trillion crypto use case over the next decade.
Think about that for a second. We're not talking about meme coins. We're not talking about speculative tokens. We're talking about real-world assets, stocks, bonds, funds, real estate, assets that already exist in the traditional financial system. While most investors are chasing the next token, the biggest players in finance have been focused on something else entirely. Whether you're bullish on crypto or skeptical of it, that should get your attention. Because the story here isn't about the next peak. It's about why traditional finance is adopting blockchain technology in the first place. Why are some of the most powerful financial institutions in the world moving in this direction? What do they see that most investors don't? And if they're right, the biggest opportunity in blockchain may not be the next cryptocurrency. It may be the real-world assets tokenization. I am serious about that, and that's exactly what we're going to uncover in this video. So, are you ready? Here's the thing nobody in the crypto space wants to admit. For years, the dream was always the same. Blockchain was going to change everything. Replace the banks, kill Wall Street, give power back to the people. But it does not mean Wall Street will die. It adapted. It studied blockchain for a decade, watched, waited, and then it quietly walked through the front door. And here's the part beginners still don't know. There is a brand new category called Real World Assets, RWA. And in the last 12 months alone, it grew by nearly 300%. So, what exactly is an RWA? Why are the most powerful institutions on the planet obsessed with it? And could this quietly be the biggest since Bitcoin? Let's go back to the beginning. Imagine you've been working hard for years, saving, sacrificing, watching every expense. And one day, you open a property website and you see it. A gorgeous apartment building in the middle of a booming city, worth $100 million, generating massive rental income every single month. But you can't touch it because you're not a billionaire. You don't have a private banker. You can't meet the minimum investment. And the people who can, they've already locked you out. The world's most powerful wealth-building assets, real estate, private credit, government bonds, have always been guarded behind a single wall. And that wall has a name: minimum investment. Government bonds with the best rates, luxury real estate, millions of dollars, minimum. And it's not for you. Private funds with steady returns, members only. For centuries, the best opportunities were reserved for the wealthy people. The rich get the best assets. Everyone else gets whatever's left. But what if someone found a way to take those same assets and slice them into pieces small enough for anyone to own? Okay, here's where this gets genuinely exciting. Even if you've never touched crypto before, you are going to understand exactly how this works. Think of it like this. $100 million skyscraper in New York City. Someone takes that building and slices it into 1 million digital tokens. Each token, $100. Each token, a piece of the building. Each month, your share of the rent, straight to your crypto wallet, automatically. That's it. That's a real-world asset token, a digital slice of something real. And it's not just buildings. We're talking about gold, physical gold, sitting in a professional vault represented by a token you can buy and sell instantly. 3 in the morning from your phone. We're talking about government bonds, the safest investment in the world, now available directly in a crypto wallet, paying over 5% interest, very single year, automatically. Business loans, private credit, corporate bonds, things that used to require being wealthy. First, now available to anyone, anywhere with a smartphone. This is not theoretical. This is not a white paper. $25 billion of real assets are already on chain. Right now, this is already happening, and the number is growing at nearly 300% per year. But here's what you need to understand. This explosion didn't happen by accident. Something changed in 2026. Something that made the biggest money in the world feel safe enough to finally move. For almost a decade, Wall Street watched blockchain from a distance, curious, skeptical, waiting. They watched Bitcoin climb from nothing to $60,000. They watched DeFi explode. They watched NFTs go insane and collapse. They watched thousands of projects rise and fall. And then, 3 things happened at almost exactly the same time. First, governments gave the rules. In Europe, the MiCA regulation created clear legal ground. In the US, new banking laws removed the final barriers. For the first time, a bank could hold a tokenized asset on its balance sheet the same way it holds a traditional one. Second, the technology grew up. New platforms made launching a tokenized asset as easy as launching a website. No more building blockchain infrastructure from scratch. And third, the most powerful force in all of finance, pure, cold, yield. When US interest rates climbed above 5%, holding a stablecoin and paying 0 suddenly looked ridiculous. The money needed to move, and blockchain was the most efficient place to move it. So who moved first? BlackRock, world's largest asset manager, launched BUIDL. Live on 9 blockchains. Fees lower than anything an institution this size has ever offered. JPMorgan launched Kinexys. $2 billion processed every single day. Total cleared since launch. Over $15 trillion in transactions. $15 trillion. MakerDAO allocated $1.5 billion of its reserves directly into US treasuries. And here's what makes this different from every hype cycle before it. These institutions don't speculate. They don't chase trends. They move slowly, carefully, and only when they are absolutely certain, which raises the question, if the biggest money in the world is already here, what does this mean for regular people, for beginners? Remember that skyscraper. Remember being locked out by a $5 million minimum. Well, the door is opening. Ondo Finance, one of the leading RWA protocols right now, lets you earn real yield from US treasuries starting at just $50, not $5 million. $50. As a student in Lagos, Nigeria, a young professional in Jakarta, a freelancer in Sao Paulo, for the first time in history, holding the same government-backed investments as the biggest hedge funds on earth, earning the same yield. With the same protections, this is what democratization actually looks like. Not promises, not white papers. $50, real yield, real assets. Right now, RWA tokens offer 4 things traditional crypto almost never could. Fractional ownership, a slice of real estate, gold, or private credit for the cost of a coffee. Real yield, not inflationary APY promises that collapse overnight. Actual interest from real businesses and real governments. 24/7 liquidity. In the old world, selling real estate takes months, With RWA tokens, you exit at 2 in the morning with instant settlement. And automation smart contracts handle your dividends, your rental income, your tax documents automatically, no broker, no paperwork. For the first time in financial history, the playing field is starting to level. But before we talk about getting started, I need to be completely honest about the risks, because there are real ones. And if you ignore them, you will lose your whole money. Here's the part the hype cycle never talks about. Just because an asset is on the blockchain doesn't mean it's safe. Just because a smart contract says you own something doesn't mean a court agrees. The biggest risk in RWA right now is what's called the legal gap. Boo, the blockchain records that you own a building. But if the land registry in that country isn't updated, you own a digital ghost, a record of nothing. This is why legal structure matters enormously. The good projects put assets into what's called a special purpose vehicle, an SPV, a legal firewall. If the platform collapses, your claim on the real asset stays protected. The bad projects, they skip that step, and you only find out after the platform disappears. There's also oracle risk. RWA tokens rely on data feeds to tell smart contracts what a building or bond is worth. If that feed is manipulated, the contract executes at the wrong price, and you absorb the loss. And finally, the freeze function. By law, RWA issuers can lock your tokens if regulators demand it. Your assets frozen, sometimes without warning. None of these risks mean RWA is bad. They mean RWA is real. And anything real comes with real consequences if you're careless. So, how do you actually get started safely in a market that's growing this fast? All right, you understand what RWA is. You understand why it's exploding. You understand the risks. Now here's the actual roadmap. Step 1. Start with the most regulated category, tokenized gold. Platforms like PaxG and XAUT let you own physical gold in a professional vault. One token equals 1 fine troy ounce. No transport, no storage. The gold is real. The claim is legally protected. Step 2. People started looking for stablecoins that actually paid interest. Stablecoins like SUSDS and USDY let users earn over 5% a year while keeping their money relatively stable. Except it works 24/7. Step 3. Real estate exposure. Platforms like Realty let you own fractional pieces of actual rental properties in the United States. Daily rental income, directly to your wallet. But before you invest in anything, run 3 checks. Every single time. Is the asset in an SPV? Yes, you have legal protection. No walk away. Who is the custodian? Where is the gold or the deed actually held? A real project answers this clearly. Is this platform authorized in your country? If not, your funds could be frozen the moment regulators look their way. Move slowly. The opportunity is large enough that you don't need to rush. In every major financial shift in history, there is a moment, a brief window, where the technology is real, but the awareness isn't. Where institutions are already building, but the headlines haven't caught up. Where the foundation is being poured while everyone is still arguing about the plans. We are in that window right now. 25 billion is not the finish line. It's the starting gun. The question is not whether this shift will happen, it's already happening. The question is whether you'll understand it early enough to make a decision that matters. Not a decision driven by fear of missing out. Not a decision driven by greed. A decision driven by understanding. Because in crypto, the most powerful thing you can own is knowledge. And if you want more knowledge about crypto and how we can protect ourselves by biggest scam, then you can watch this video on my channel. The institutions aren't waiting for permission. The RWA technology isn't waiting for validation. The only thing still waiting is you.